After experiencing a heavy sell-off last week, copper prices recovered and were last trading around a two-week high despite few changes in the macroeconomic landscape. It was a busy week in the economic and political sphere with a host of data releases, a proposed overhaul of the U.S. tax system, and news that a majority of large miners are scaling back production for 2017. But first, earlier this week, Treasury Secretary Steven Mnuchin unveiled the much-anticipated rejiggering of U.S. tax policy, which was highlighted by lowering personal tax rates and cutting the corporate tax rate from 35% to 15%. Investors loved the reveal, sending equity markets to record highs and spurring a dollar rally. Still, the optimism didn't fully translate to the metal side because there was a lack of news on infrastructure spending, which has been an industry focus since President Trump was elected. While metals have sustained a modest recovery this week, ongoing supply issues, particularly on the copper side, has yet to produce a sizable uptick. However, over the course of the year, bulls could gain an advantage, with BHP Bulletin, Freeport-McMoRan, and Antofagasta all reducing their productions for 2017. Finally, last but not least, U.S. GDP release this morning showed the American economy grew at a paltry 0.7% in the first quarter. It was the weakest first quarter reading in 3 years and represents a slight disconnect with low employment rate and consumer confidence at a multi-year high. Looking ahead to next week, the economic agenda is light, but all eyes will be zeroed in on Washington to see what comes on the political front with the Trump administration surpassing 100 days in office. I'm Dalton Barker for the Metal Bulletin Group in Chicago.